We just saw Morgan Stanley's Mike Wilson come out with that mea culpa, saying he was just a little bit too bearish with his outlook. Oaktree has more than $172 billion in assets under management, exposure to so many sectors. What's your outlook now? Has it changed throughout the year?
We've been quite impressed with the ability of the Fed to control inflation, to bring it down towards a more manageable territory. And economic growth has actually been quite stable and strong in the meantime as the Fed has raised rates. However, I think the impact of these rate increases are going to be delayed. They typically take 12 to 18 months from peak rates to actually see recessionary influences or recessionary impact from those rate changes. And I think that's potentially in the future for us. But for now, with inflation under control and the economy fairly stable, there are reasons to be exuberant.
So you mentioned recession. So what is your recession outlook, if you don't mind me asking? We actually had the chief economist of Apollo, a company in your peer group, saying he believes the recession odds are actually at 60%, much higher than the consensus right now. Where do you stand?
I think there will be a recession next year. The hard part to know is how deep would that recession be? What we do know is that we've had a period of very easy money, very low rates for quite some time. And with such a sudden increase in rates, and if those rates stay persistently high, it's hard to imagine how a recession would be avoided. If the economy stays as strong as it is, with positive GDP growth, the Fed has no reason to reduce rates. So we are in a position here, a sea change, where rates will stay higher for longer. And at some point, the asset bubbles that were created over the last 10 to 15 years with easy money will deflate. What stands to reason is that a recession could follow as access to capital becomes tighter and tighter over the coming quarters.
So I would imagine, like a lot of people in the global investment community, you're waiting for Jay Powell's press conference tomorrow after the decision. That quarter-point hike, that's pretty much assumed that's going to happen. When you're listening to his outlook in that press conference, what are you expecting? Is there something in particular that you are listening for?
I would be listening to his tone about the trajectory of inflation coming under control. I would also look for any sort of signs about concerns around stimulus that's already working itself through the economy. If you look at recent Biden stimulus packages, in addition to just the COVID-related stimulus, there's actually over $3 trillion of spending that's coming into play in the economy, and that is more inflationary. So the Biden administration stimulating and the Fed trying to pour cold water on the markets are really counteracting one against the other. And I would look for the Fed to talk about how persistently high or how tenacious core inflation has been, given some of that stimulus backdrop that underpins the economy.
All right, huge earnings week this week. We have a large percentage of the S&P and the Dow reporting. We've also seen the big banks and the regional banks reporting. That's kind of following some of your, leading us into your core business, private credit, private lending, which is a huge global business. What have you seen from the bank earnings? What does it give you? What kind of insight does it give you into the private credit market, something that was expected to really expand with credit tightening overall?
I think it's a great era for private credit. The new vintage of private credit loans are the most attractive they've been from a risk-adjusted perspective for many, many years. Loan to values on new transactions being done are less than 50%. Rates being charged for very large businesses borrowing are approaching 12 to 13% on a first lien basis. I think the reason for that is that the investment banks have stepped back from the markets due to the hung loans that created such trouble for them in 2022 and early 23. And the regional banks are saddled with some real estate loans, as well as other smaller corporate loans that they expect will be troubled because those asset classes tend to be very rate sensitive. As a result, we are seeing a pullback of the banks from the lending market and an opportunity for the private credit market to step in, especially in large cap sponsor lending, where typically the large banks were very active in the syndication process.
All right, another area that you're very active in, large cap tech. We have some big earnings this week as well. Microsoft, Amazon, Alphabet. What's your expectation?
The economy is showing pretty good strength, and I would expect performance to be consistent with past quarters. I don't think that they're going to see a blockbuster quarter anytime soon, but I expect that those businesses are quite resilient and reflective of the overall economy being in roughly decent shape at the moment. So I would expect strong earnings from those tech players.